G'day, ladies and gentlemen. My name's Alex Watson. This is Bindi Holland, and welcome to Finance But Neat, where we know that like a glass of whiskey, finance may make you cough and splutter to begin with, but if you get through that initial shock, you will enjoy the rest of that glass and the outcomes. It's a good analogy.
It's good.
It's a good analogy. I think
it's actually great.
How many times, and I'm totally guilty of this, it probably took me 10 years to be able to actually sit down and have a conversation with Anna about money.
Yeah.
It took a lot of time for me to actually mature to the point where, this is what I discuss all day, every day with everyone. And so to come home and have that conversation, one of the big fixes was we moved that to this morning. I don't do it at night anymore. It just doesn't work.
Yeah.
But just, I was just a little bit arrogant and expected Anna to just know.
Yeah.
I think so.
Yeah, I've always looked after things. I think, you're probably the same, but when you're a banker,
yeah,
it's your job. Like everyone just
we got
assumes
engaged. Anna, come in. We're opening bank accounts.
Yeah.
240 Queen Street.
Yeah.
I think it was Michael. Do you remember Michael? Yeah, we don't need to get into that. Yeah. Oh man, I want to talk to you about that. Yep. All right, we'll talk about that after.
But today's topic,
yes,
one that I'm really excited for.
Yep.
Because I think it's relevant to people in our age group. Everyone's sort of on their own path as to when they do things. But one of the things that comes up in I think everybody's life is you've bought your first house. Now
it's time to get 2 new cars. And no,
don't do that.
No, don't do that.
Don't. My dad will be so upset. Can
I just say that for a second? I think one of the biggest things of buying a first home, and any first home buyers are going through that really hard grind period and tough thing that at the moment you're going, hey, we're saving every little cent. Like we just spoke about it briefly. I've been there. I've done that. I've had the just moment where you finally do and you're like, all those things that I've been putting off, I can now actually afford and pay for and do. Just delay the car purchase for 2 years.
Yeah.
Just do it.
Really
do the car purchase for 18 months. It will kill your finances. And it's so easy to get car loans when you own a property.
Yes. Yes. Well, that's the thing, right? Is you've bought your first property. By now, most of us have a bit of equity in it.
Yeah.
Especially with
you bought before 2022, definitely.
Yeah, and with the increase in prices, most people have just accidentally got equity, which is a really good position for us all to be in. But your life changes. You have kids, you need more space, you start businesses, you do different things, and you need a property that suits your needs better than the first one that you entered the market in.
Yep.
And so it's time to upgrade. So that's what we're going to be talking about today is the different things to consider that maybe, your big brother or your friends and family, when they did it, they didn't consider and could have done differently. So don't just follow in their footpath and what are some of the questions that you can ask to make sure that you're not only setting up your next house, which is front of mind, but also your next move in your property portfolio.
Do you think it's, and this is massive aside, do you think it's harder to live in a 3-bedroom house now than it was 50 years ago?
I think the size of your house depends on how old your kids are. It doesn't matter how many kids you have necessarily. It's, or do you mean money?
No,
like
I
cost,
just...
Or like space.
Just space. Like it...
Space.
I grew up in 3-bedroom homes.
Yeah. I feel like...
I own one.
For me, I have 2 kids.
Yep.
There was a time where they had all of the toys, a time you're in now where they've got stuff. They have little kitchens and all of that kind of stuff. That's got to go somewhere. And if you're anything like me, you get crowded in on.
I'm not.
I couldn't deal with that, and we moved to a bigger house to have a separate lounge room.
Yeah.
I was like, I don't need any more space other than I just need them to have, a playroom.
Yep.
Older kids, fast forward to older kids, we already downsized and we do not at all regret that. So, yeah, they do come with a lot of stuff, but it's only for a short period of time.
Yeah, I think yeah, cool. That's it's just on my mind constantly. Like with 3-bedroom, we got 600 square meters of land. Like we bought in 520, so 520 in 2019. So we're one of the lucky few.
Yeah,
so,
yeah. But before we get to that, I wanted to talk to you about introducing a new segment. I'm thinking we call it barbecue chats.
We're all great financial decisions.
Yeah,
start.
exactly. Well,
Yeah.
where I will usually get pinned down by somebody to chat about whatever's going on in their life, and they'll ask me a few questions. It happens so much, which is a great thing. I love to be a resource for people. But just recently, my sister asked me a question, and
You said you weren't going to say sister.
it seemed really obvious
Yeah.
to me, but it got me thinking, like, she's a smart girl. Like, if she didn't know it, maybe there's a lot of other people that don't know it as well. But she asked me, like, she knows she's got equity in her property. Yep. She bought, a long time ago.
She had a fantastic bank lender helping her.
She did. I think you might have done her home loan. But she's got equity in her property and she knows that. But she's like, how do I get it? Where is it now and how do I get it out? I want to use that for something. Yeah. But how do I get it?
Hilariously, I think maybe 3-4 years ago, my brother's now business partner asked me the exact same thing.
Yeah.
And I think it's an interesting kind of, because we just take it for granted. You just borrow the money. Like in the first episode, we spoke about a 2 pillars concept. You always need to show your ability to service, your ability to borrow that money. But realistically, if you want to get the equity out of your house, you're going to have to either sell your home or leverage and borrow against it. And however much that might be, like we've got a few, I think we're doing like 20 grand, 40 grand or something at the moment as part of a refinance and a bigger restructure.
Yeah.
And it's not an easier process.
Yeah. And I mean, you don't have to necessarily borrow it. Like when you're talking about borrowing against it, it doesn't necessarily mean that you have to increase your current loan or even get a expanded purpose loan or anything like that. It could be cross-collateralising.
No one knows what an EPHL is outside of.
Don't they?
No, it's hilarious. Yeah, sorry. Cash out equity. Cash out equity.
But yeah, you could be using the security, like your property, to buy another property without and it goes onto the new loan. Like it's all your equity working for you, but you're getting it out in a different way, I suppose.
Yeah, and I think like if you just kind of go really simple, like if you cross-collateralise a property, you are just doing a paper exercise to note that you're using the equity. And so the bank isn't worried about apportioning debt to property. They're going, we've got this much equity, we've got this much debt, percentages all make sense, servicing sweet, thumbs up. And then if it is, we need to kind of look at the structure a little bit, then we're just going to be in a position where we go, hey, we've got your home loan here, we've cashed out a little bit of equity, and that's going to be the seed fund for another investment or whatever. I think we think it's as, generally a little bit more complicated than it is because we think it's incredibly easy. And so we can often oversimplify at the same time. So,
well, I mean, it kind of leads into today's topic, right? Is, you're upgrading your home. Most people are going to be using the equity that they've built in that time to upgrade their home. I think what I see so often, and it certainly has been, the way that's been paved as the normal thing to do, but most people will realise they have this need to upgrade their property and they'll buy a new one and move into it, and they'll buy that specifically as their forever home that they want to, really spend some time on, raise their kids in, that sort of thing. And then the natural course of action is to then rent out the first one. Like, do you see that being the best strategy? Is that what most people do in your experience?
I think what everyone wants to do is one of two things. They inherently want to keep their first home as an investment long term, because I never want to sell a property personally. And we'll kind of look back to that in a second. Or what they want to do is they want to sell and then buy, because they want to be in a not great a debt position or repayment kind of situation. And I think those are the two goals that we see time and time again when people start this conversation. And it's not a straightforward thing to kind of answer a lot of the time. Like from my perspective, when we look at how can we help someone upgrade a home, I'm really looking at like a bit of a triage process.
Right.
what is one of these 6 processes that we can do to help you achieve this goal?
Yeah, cool.
And it's all about just giving our clients options as opposed to what works for us. Like it's, hey, these are the options. Where do you actually sit on what is possible? Personally, I would say that I never ever want to sell a property, right?
Yeah, I feel that.
I never I've spent all this money. I've bought the house. I've paid it down. The debt's decreasing. I'm in a really comfortable debt position, unoccupied. Like it's personally, and this isn't professional advice, personal advice whatsoever, but just how I feel. Like I've got a really comfortable home loan amount.
Yeah.
To then go and turn that house into an investment property, very low, it's positively cash geared already. But then I've got like a $2 million property. Like realistically, to upgrade in Aspley, I'm probably going to have to spend 1.5 to 2 mil.
Yeah.
Whether I will or won't do that, it can or can't do that's beside the point. I don't really want to do it. But that's just the facts and the figures, right? And so suddenly you've got a small amount, you've got a cash, positively geared property. You've got Anna and I double income, and I'm just always looking at this calculus going, like, that's a lot of debt, a lot of cash.
Yeah. So if you guys were to do what I just said, upgrade the house, you're spending a whole bunch of money to buy something better than what you've got now.
Yep. If
you were to rent out everything structured in the way that you've got a positively geared property, which, great, but in terms of how can you maximize your income? That doesn't sound like the best option.
Yeah. It would probably be sitting down with a financial planner and going, hey, and accountant, seeing who will actually give me personal advice.
Yeah.
Because I think between those two experts, like financial planners will give personal advice, right?
Yeah.
That's what they do. Where I think and accountants, they can in certain structures, but they're sometimes a little bit reticent to do that. It's just a little bit, it can get a little frustrating having those conversations. And if you're a business owner out there, just push back on your accountant, challenge them, make sure they know what your goals are. I think that's really important. It's why I love mine so much. It's, we can have a healthy tension on what we're trying to achieve, and there's no projection of her risk appetite. It's just, hey, this is how you stay legal and compliant.
Yeah.
Which, thank you for protecting me, Laura. YOLO. I would say for us, I actually think what we'll end up doing is a reno, keeping our debt position, and then using the equity to go and buy other things.
Yeah.
I would love to cash flow the reno, but that's probably unrealistic, to be honest. I don't want to live for the next 5 years in a house that's getting renovated. And I also don't just want to go like, here's, we've spent 5 years saving XYZ money, 200 grand or whatever that would be, and prices are up here now. And like, there's just, so I think, like, to kind of get back to the question, I would be really, really interested to sit down with my financial advisor and have a conversation. Hey, is this property in this structure in my personal name the best way?
Yeah.
Or do I need to sell this house, get all that equity in cash, chuck it into a new purchase, and then maybe I can take it out and do other things with it? So I've minimized that owner-occupied loan on the next stage. So Anna and mine's lifestyle, choices stay relatively the same. And then we can go and do other equity things and invest and do what we want kind of with that equity elsewhere.
Yeah. So I guess if there's so many options and different things, and, I'm sure in your experience in lending to people, you sort of start to see new ones that their accountants and financial planners have suggested or whatever. Yep. If there's so many different strategy approaches, I guess how do you figure out which one's the right one for you?
Yeah, I think there isn't that many 35-year-olds like at our age. We've owned property for 3 to 5 plus years. We've got a bit of equity. We've got the kids, like yours older than mine, but the girls are 4. Now they're starting school next year, and it's like If we add another kid to that mix, it starts to like, man,
Yeah.
you know, my second bedroom, which is my dressing room really, and my whiskey storage, that's gone.
Yeah.
And so it just becomes this kind of like, where does this kind of stop? I would say it's about kind of understanding where you're at now and what your options are first, and then taking those options to the right professional or as a couple sitting down and figuring out what you want to do.
Yeah.
And ultimately as a couple or whoever's making this decision, I find these decisions are easy when you are in a couple because you've actually got people to disagree and bounce off. It's generally, unfortunately, our single clients who get stuck in that analysis paralysis a bit more. But for us, what we do is we'd look at our current situation, see where we're at, understand what our options are. As the broker, I would go, hey, this is this. And we've got a really clear defined triage process, right? So if someone comes to me and go, okay, can we keep the existing home, rent it out, and then borrow to buy a new one?
Yeah.
And then if you guys change your mind later on, you can sell. That's your choice. But for now, can we nail that? Yeah. Is there a timing thing where you can purchase the new property as an investment where maybe you don't need to move into it for a little while? So can you do that now, purchase an investment and then sell and buy kind of in 12, 18 months, 2 years, whenever you need to do that, right?
Yeah.
Like that's kind of an option.
Yeah.
Sell with a long settlement and then just purchase. To be honest, that's probably the biggest win. I see
Yeah.
that.
So negotiate a longer settlement period with you.
You're selling a property. You've got the power.
Yeah.
So like I have seen so many people miss out on and I'm getting ahead of myself actually, but I've seen so many people just sell and then go out and buy. And those ones seem to win every single time. So we'll loop back to that.
Okay.
But you can sell with a rent back arrangement. So it's 30-day settlement period.
Yeah.
Rent it. You got 6 months to find something.
Yep.
I've just seen too many people get stuck in their house on that one.
Yeah.
And then like 12 months down the track, they're like, oh, the market's moved.
And I suppose, does that limit your, like, the people that are buying the property? As in, do they have to be equipped to be able to rent it out? I suppose it limits who will do that with you.
Yeah.
Right? Like,
I mean, look, it depends if you're quibbling over 20 grand on an offer.
Yeah.
In this market, especially in Queensland, like who cares?
Yeah.
Yeah. I think most people, like if you're selling to a first home buyer, right? And you're like, hey, like I just want to stay for 2 months.
Yeah.
I need a rent back option in case we don't find something. But as soon as I get a contract, you got 30 days. Like just what you can say, and this is really the communication between you and your agent. What you can say through an agent is very different from what a solicitor will allow at the same time.
Yeah.
So when I bought my first home, we got told one thing from the agent, and then when the solicitors started engaging, the sellers were like, nah, actually, we didn't nail that transaction, soz.
Yeah, okay.
So I think, and look, I always tell my clients as well, like always communicate through the agent first before you go through, like control messaging through the agent will help with that before you go to solicitors, because solicitors will go, here's the request, yes or no.
Yep.
Agents will warm up. Yeah. They'll flirt with the other party a bit, go, hey.
Yeah, they know what they're doing.
Hey, how you doing? Yeah. Not just, do you want to go out?
Yeah.
And then, look, bridging finance. I love bridging finance.
Same.
I think it's got a bad rap, but man, does it solve so many issues.
Yep.
So many issues. And then, honestly, it's an option. It never works buying subject to the sale of your house.
Yeah.
It just, when
Or
sellers
if it
have
does,
options.
it's very stressful.
Yeah, it always falls over. I
Yeah.
can't remember the last time I had one worked.
Yeah.
If someone says they're willing to consider a condition, they just want an offer. The agent just wants an offer out of you.
Yeah.
So
And I think in this market as well, you've got like that many people keen to move around that you don't always have the ability to put in difficult clauses and things like that.
Yeah, when you're rocking up to a purchase where it's like, hey, here's an offer, hope I get it. You've got, especially in Queensland, like I think in Sydney and New South Wales, like it can be a little bit of back and forth. You can get gazumped unless you exchange contracts. WA, it's fast and furious. You're back and forth, especially in Perth at the moment. It's crazy.
Yeah.
SA, a little bit more sedate. But Queensland, we've got the first best and final offer rules.
Yeah.
So it's very much here in Queensland where you go, hey, there's multiple offers situations. So legally we are in multiple offers.
Yeah.
You put your best foot forward. What's your best and final?
Yeah.
And that, where I think agents go wrong is not misrepresenting that as an option, but actually when they're going, oh, I've got other offers, it's like, yeah, if you actually really had other offers though, you'd be doing this.
Yeah.
So a client had that recently and I was like, mate, if that offer was real, here you go, what's your best and final?
Yeah.
So he bought that property, by the way.
Basically what you're saying is you've got, like, as a lender and you're working with their team, their financial planner and whoever
Broker.
else.
As a broker.
As a broker. You've got, a triaging process to figure out what is the least amount of impact I've got to give this person to get them to their next goal. And as their options, like, you rule them out and keep going through to figure out how much you actually have to change or impact things that they maybe didn't want to flex on until they get to that point where they find equilibrium.
When every option seems open, it's really hard to make a decision.
Yeah, right. Yeah.
So if we can remove options, figure out where you're at. So we'll go through, hey, what are the basic information we need to run a borrowing capacity?
Yeah.
And then let's problem solve.
Yeah.
And this is the 5 or 6 things that I'm running through going, what's an option,
Yeah,
what's an
cool.
option, what's an option? What can we give them to work with
Yeah.
to make the decision what actually suits their life, family goals?
Yeah.
And so I think once you go through them, you go through the pros and cons, you understand their needs and requirements, which is a big thing for us. Once we've done that, then it actually distills the options into, okay, we want to make this move and this is how we're going to do it. So I just think, like, I use this analogy forever now, like a broker is legitimately the current location on your maps. If you need to know where you're at, a broker helps that.
Yeah.
Do we help break the tie? What's the best, most ideal, optimal finance? Like, I will always argue against optimizing finance because of risk. I don't think it's always taken into account enough. But the reality is that, like, you've got less options than you sometimes think, and that's not a bad thing.
Not a bad thing, yeah.
Not a bad thing.
Yeah, I really want to highlight one of the options that you said because you sort of, you breeze through it, but it's a little bit outside the box in the way that people's brains normally think, and I really like it, is that sometimes the goal is to upgrade the property, but sometimes it's 2 things. Sometimes it's like, hey, we need to buy an investment property, therefore let's upgrade and rent this one out. And that's like just the actual upgrade itself might be thought number 2. It maybe it's I need to do an investment. The natural course is let's get ourselves something better and then rent this one out. But you said before one of the options could be that actually you just buy the investment property, and it really sparks something with me because you can be really quite tailored around the property that you buy. If you're going out to buy an investment property, right, like you put it near a train station, near whatever school or whatever, you could really set yourself up if you're going out to market to buy an investment property. And maybe the forever home is piece number 2 in that project. Like it doesn't have to be that way. Yeah,
and I think that's probably where Anna and I are leaning at the moment, right? We've got a really cheap home. We can probably buy a couple of. I know I'm a mortgage broker. I know we can buy 2 investment properties.
Yeah,
like it's right there. And so it's do we get the dream home now? Or do we go and create some equity kind of long term, get some really, really good performing assets, wait for that to catch up, then pivot? And we love where we live, right? So I think that's an advantage. I remember 2019 in Bracken Ridge rocking up as a mobile banker for CommBank and these guys on Garwain Road had purchased this house as first home buyers, and they just tried to shoehorn whatever they could get into, right? Like as you do with your first home at times, like do you want to buy a property? Yes. What can I buy? Please let me buy something. Like that's the process.
Yeah.
And so these guys had just bought something. They've got 3 kids. They bought in 2015. Queensland had done nothing. Brisbane is 1% growth, which was less than inflation in Australia at the time. It was just like, don't get you. I don't know if you remember, but financial planners were walking in to meetings in branches going, why would you buy property? And I'm there as the mobile banker going, buy property.
Yeah, please buy property.
Like, what are you on about? They're like,
Yeah.
just put money into it. I'm like, you're just selling bonds and insurance.
Yeah.
Go away.
Yeah.
But no, like these guys are like, we've owned this house for 5 years. And I'm like, it's done nothing.
Yeah.
Like, yeah, you've got no equity to get into a bigger house. So sometimes, and that's the assumption that I was under when I bought my first home in 2019. Like, hey, I'm going to have to save to buy another investment.
Yeah, like you
second
could
home.
just sit here stagnant for 5 years and
Yep.
we spin our wheels.
Yeah,
Yeah.
but in the market, it's going to double 5 to 10 years, which hilarious. I was like, Dad always taught me that growing up. Like, property doubles every 7 to 10 years.
Yep.
And I was like, sure. I was like, all right. And we'd had arguments about it. I was like, look at this. I know historically from like the 1990s to the 2010s, like, sure, it's gone from 90 grand to 400. Like, that's massive. It's not going to do that again. It's kind of stagnant. I'm an idiot.
Here we are.
Experience teaches you nothing.
Yeah.
But yeah, like it was in a position where I was looking at these guys going, hey, we've got these houses, we can't move at all. That's the assumption I bought my house going, I'm just going to stick here until it worked.
Yeah.
But because I had that assumption, I actually worked harder to buy that first home a little bit better.
Yeah.
And so I made sure I was buying something a bit better that would suit me longer.
Yeah.
I've got a 40 square metre lounge room, which is hard to articulate, but it's double the size of this office we're in.
Yeah.
Like, it's massive. And then 3 bedrooms, which aren't massive at all, but that lounge room would make it Bindi palatable for kids stuff.
Yes, right. Well, you don't have the problem that I had. Yeah.
I do have the problem.
We've two kids. The same
problem
age.
is that I'm the tidy person, and you've seen this office.
Yeah.
Sorry, Uns.
One of the other things that you said that just made me think is bridging. Like you, I love bridging. The whole idea of bridging, I think, is fantastic. I know a lot of people are scared of it. I know, I've had, an older generation sort of say to me, oh, like, you don't want to ever have a bridging loan. That's last resort. That's so expensive.
Your parents. My first exposure to bridging loans was as a bank lender.
Right.
Like, had you already got these preconceived ideas about bridging from family?
Before that. I mean, or maybe around that time, maybe when I started to understand it. I even had, when I was a lender, I had customers and I would suggest it as a solution and they'd be like, oh no. And someone had said to them, it'll absolutely kill your finances if you do a bridging loan. And I was unable to understand it at the time because it's a solution, right?
Yeah.
Like it's a means to an end. And there's a lot of situations of people that I know where they can do what they want to do through only a bridging loan and that's a good thing. So
I know we don't have coasters. I'm breaking script here.
Oh, don't.
I'm using the books. Sorry, Morgan Housel, you write a great book.
Yeah.
It's a great book. If anyone wants to look at it, The Art of Spending Money, it's a good book. But right now it's glorified toaster. Coaster. Sorry. That is not actually my dog ear. I'm not that far into it. Look, it has changed over years. And so you and I probably made some pretty good living off bridging loans that had nothing owing on the back end.
Yeah.
I know I really enjoyed those loans.
Yeah.
One of my biggest ever loans that I funded within a year or two of starting our careers. And Callan, I big noted myself early on, and Callan was like, mate, anyone can be 150% to target when they do $3 million bridging loans with nothing owing afterwards.
Yeah.
I was like, dang it. And you guys all went to platinum and I didn't. Not bitter. But no, like I remember it used to always be, so like Combank, just because that's the context we were working in, they would do zero residual loans just as like, it was just a service, really. They made no money out of it. It was all the same interest rate for bridging and during and post bridging. It was just actually a really good deal.
Yeah.
The banks now have removed discounts off the bridging portion. So all the majors, maybe not NAB, but I think most of the majors, a fair few second tier banks, they all do bridging, there's a lot of options out there. If there's no residual debt, it's a little bit harder. your bank will generally do it for you if you've got a relationship, but it is a service for them. Like it could be 2 weeks.
So just to clarify a couple of things.
Yep.
So when you say residual debt, you're talking about the loan that's left over after the property is sold and you've paid off your bridging loan. There is sometimes a residual debt, as in that's your new home loan now.
Yep.
That goes on for the next 29 years.
Yeah.
And when you
The
say
post-bridging.
Yeah.
Yeah.
Yeah, cool. And so also you just mentioned then they've removed discounts. You mean from the rate? Like the actual interest rate is more for bridging?
So there's, at a very high level, there's 2 types of products, right? You get a packaged product with offsets and all the features and all the kit and caboodle, and then you get basic with just redraw, no offset. Generally fixed and standard variable fall under that. When you go bridging, you generally have to go to a packaged product of some sort.
Right.
And so if you've got like a 9.49% advertised rate as a bank, or like that's their base rate, then we as brokers go and negotiate your discount, which sticks on that loan for life of the loan, which then post-settlement, you help manage that with the banks. And we so that kind of all happens on your post-residual bridging loan portion.
Right.
What they don't do anymore is they go, we're just going to charge you the highest undiscounted rate on the during bridging loan. So if you've got 500 grand, it's probably an 8 to 9% interest rate on that.
Okay.
Which, clients who just settled recently, it was 5 days.
Yeah, well, that's the thing, right? Is how long
that was WA. You can actually time it well. So it may be a small amount of time, but in actual fact, you save those expenses on moving your stuff around or staying somewhere else or whatever. Like you would really have to think about, it's interest, and everybody hates paying interest, especially at a higher rate. But how long? Like let's numerize it per day. How much are we actually talking about? And does that save me in other areas in terms of making the logistics of this move easier? Yeah. $124 a day.
Right.
In interest on a 500 grand
Did you
bridging
just
loan.
work it out then?
Yeah, I've got a calculator. I was doing it already when you said let's numerize it. I was like, done.
Yeah.
I was like, thank you. I don't know how you did this. If we have a look, let's just say it's 60 days. What?
Yes.
That's $8,000 for 2 months to go from house to house.
Yeah.
Now, most capital cities right now, apart from pockets in Melbourne, if you go, I want to buy a house, I'm going to get a bridging loan, we're going to go really, really hard. My feedback to you is your life needs to be focused on 2 things: preparing your house to go on market.
Yeah.
And when you're making offers, make sure you tease the new agent you're buying off as, hey, we're selling over here. If they're local, we're selling. If you want to, can we get an appraisal at the same time?
Yeah.
Guarantee you're going to get an insight into that. Like you're going to get an inside track.
Yeah.
The next thing that you need to do is you need to be preparing for buying that property. So you're at all the open homes while you're looking to sell and preparing for sell. So like the clients who I see win, they're packed, they're ready to stage, they've already got the agreement, they've locked in the agent, and as soon as they've got the contract, they're on the market the next day.
Yeah.
So as soon as they've got a property.
So they're minimising that bridging time.
Yep.
So they're minimising their interest.
Yeah, so the guys who did it recently, we'd actually talked about this 18 months ago and they just needed to get through maybe 12, like some maternity leave and get a cash payout he had and all this. Like there was a bit of stuff going on. So once it did happen, there was no doubt in his mind. He's like, I do not want to be homeless. I don't want to be in between. We're going bridging. We've got the equity. We've got the cash. We can make it happen.
Yeah.
We restructured everything preparing for this move so we could actually have the maximum amount of owner-occupied debt on the non-bridging loan. So that decreased the cost again.
Right.
And then we had, just the ability to do it quite simply and easily. And they settled 4 days with a public holiday thrown in between. That was not stressful at all. But they settled 4 days after, 5 days or something crazy after. Like it was not an expensive process, and they're in their forever home.
Yeah.
Like what does that cost? Now that's the major banks. If you are struggling to kind of get it within their policies because they've got a few policies that you need to kind of admit they're a bit conservative. There are specialist lenders who will do bridging loans.
Right.
And that's when the traditional cost that I think we know about starts to come in.
Yeah.
So the bridging interest rate isn't too dissimilar with those.
Yeah.
You have no payments whatsoever during that bridging, and they capitalize all the interest onto the loan.
Okay.
And Westpac, for example, also does interest capitalized as well. Like every bank has a different policy. It's really like there's a lot of options out there. What I would say is you've really got to go, okay, it's super easy to get this quote. Is there something happening in my life that I just need longer on this bridging, and maybe the bridging specialists are a bit better? Like there's all these different options, and we just go, hey, these are the goals that you said you wanted. This is your needs, your goals, requirements. Let's talk about the pros and cons of these options, but here's the quote if we can't get this through here.
Yeah.
Because these guys generally will give you a better purchase price.
Yeah. Yeah. So I guess ideally you're preparing for worst case scenario. There's a lot of levers that you can pull in the moment. You know, if you're working with a good team, you can pull a lot of levers in the moment to reduce the cost of a bridging loan. As in, if it was me, I would have a bridging loan approved. If my buyer for my original property, if they're ready to settle, I'm saying, hey, do you want to move in a couple of weeks earlier? Like, you know, that sort of thing. Because you try and make things better for you in the situation, but prepare for the worst a little bit, I guess. Yeah. Yeah,
I think I've seen settlement dates lined up very, very quickly in the past.
Yeah.
So we've gone unconditional on like a purchase with bridging loan, and it's just really easy to unwind the bridging portion.
Yeah.
Like it's very simple. And I think banks do that by design because they don't want to, like they understand that quite often it can secure a large amount, and if they aren't quickly to pivot on a bridging loan, it can be quite poor.
Yeah.
The specialist guys they're world class at it. They'll approve something in 48 hours. They'll just attack it. They understand where they are in this. They're a solution. Yeah. So I think kind of going, hey, worst case scenario, we're going to go bridging, but what we can do from a triage perspective is we can go, we'll prepare for a bridging and then pivot to a same-day settlement, a sell and buy.
Any other option if it comes up.
Let's go on the market. Let's get you pre-approved with the bridging. Take your property onto the market, and then let's react as it all happens. Yeah. So, yeah. I know in the UK, just as a sidetrack, I believe what happens a lot is they actually have these chains of properties, all stacked, all subject to, and if one falls over, it just... So I'm kind of glad that subject to the sale.
I've been involved in that as a lender. You know, we had to move settlement because somewhere down the track, three houses ago, it didn't settle one time. Yeah.
I'm glad. Thank you, agents, for your self-interest in removing that, because it's just the amount of heartache I've seen over that. Yeah. Just sell and buy. But no, I think just going to a client, having the conversation, understanding capacity, understanding equity, again, tying it back to the two pillars that make it possible, we can then go, okay, is option one, can we keep existing home, rent it out, borrow to buy the new one? Do we need to purchase the next property as an investment and take a bit more of a long-term strategy? Can we sell with a longer settlement, or just sell and buy really quickly? And that, I actually think, just as a side note, the reason I've seen people win out of that so much is it's in the same market. Yeah. You're selling and buying in the same market. It's when people sell, don't buy immediately, don't feel the pressure, and buy 6 months and have to go, crap, I need to save more money, and my money's now going 2, 3, 4, 5 years later, suddenly they're back in the market. Yeah. And it's man, just do it at the same time. Yeah. Sell with a rent back arrangement. It's just I don't think my parents ever sold a property without doing that. I don't think Dad and Katrina ever did. They're we've got a family, we're selling, you want this house? And it's you got more power as a seller now. Yeah. So bridging finance and then buying subject to the sale of the house. It's an option. It really isn't an option. Yeah. So these are all the things that we can kind of rule in, rule out. Yeah. As I'm having the conversation with the client, we're going, hey, where is your risk appetite? Inevitably, when it sells sell and buy, it always oh, I don't want to do that. A lot of the time that comes back as an option because people realize how how quick it actually can be. And the right buyer's agent will also help with that one a lot. Like if it is a genuine fear but something you have to do, let's just get a buyer's agent involved.
Yeah.
So,
okay. Let's talk about when we're upgrading to our forever home. In terms of borrowing capacity, which is a big one, because you're going from if you're keeping your existing rental as a rental, you've got 2 loans which you've maybe never had before. So you're increasing your exposure to debt and repayments and interest rate increases and all of that kind of stuff. In terms of maximising borrowing capacity so that I'm in the best position to put a really good offer on my dream property, what does that look like when we're talking about renting out the existing property?
Yeah. I think when I just look at it purely from a how banks assess it perspective, and this ties into, like banks know what the ATO will let you do, right? They understand tax deductibility. They want to maximize your borrowing capacity at the same time.
Yeah.
And so they're not going to do a property portfolio efficiency test or anything like that, but they are going to look at, the tax deductibility nature, your income, ownership, like they're going to assess all that. And so if I look at myself, for example, or, anyone kind of wanting to upgrade, if you've got 300,000 to 500,000, 600,000 owing on your home and it's worth 1.2 to 1.5 and you're trying to upgrade to that $2 million property, if you look at that kind of, renting that out, increasing your taxable income, what you'll start to find is your borrowing capacity is very, very limited compared to what your equity can do.
Yeah.
And so realizing the equity as a sale event quite often, so like if I looked at, renting that out, you might get 4% rental yield on a good day. Buying that, I would say you're better off releasing that equity than using your borrowing capacity in that perspective. So your borrowing capacity, and these are just numbers I'm pulling out, might be 1.8. But if you sold your property, your borrowing capacity might decrease down to 1.5.
Yeah.
But you've got $700,000-800,000 to use.
Yeah.
And so what would you rather? Would you rather take all that, decrease your loan, buy for, $2 million, get a 1.2, $1.4 million loan, have a lower home loan, still have some equity to do something with in the future?
Yeah.
Or would you rather be limited at that 1.8 mark?
Yeah, well, I suppose it depends on the market and
minus
what
costs.
kind of house you want. But I mean, if you've got a little bit of equity left over, and you could then buy another property as your investment property that maybe was tying up less of your equity or whatever. You could then choose. You go into market for that investment property again, right?
Yeah. So if you've got the borrowing, like a healthy borrowing capacity. And you're walking away with, $800 to $1 million in equity once you sell, you go buy that, you've still got, like if you get $1 million home loan with $1 million cash, 800 cash, which sounds insanely high, but it isn't unrealistic. It isn't unrealistic that you would have that much equity. Like I think I'm only 300,000 to 400,000 off that equity position, right?
Yeah.
So with looking at that kind of like cash position, well, you give me $400,000 to $500,000 equity that we can cash. There are banks and lenders out there that if you're using it towards another property, with a letter from your accountant or financial planner, we can get negative gearing on that cash out. Yeah. When we then look at the next kind of transaction, we can take that equity, go and buy an investment property that's probably better performing than your original home, potentially. Like get a proper financial advisor, property advisor. Get the right experts to make sure you're building a portfolio, but from
one that's going to make you some money.
Like my house is tapped out, like it's not growing at the moment, and so I'm like, well, what's my equity doing in the house? How can I get it out? At that kind of higher end market, it doesn't grow as aggressively sometimes as the first home buyer markets do because guarantees. So like it's where's your money better off? And it's that real like I don't want to sell a property.
I was going to say this comes right back to that emotional tie then because you're either, similar to you where you just want to hold on to all your assets because it makes no sense to get rid of them, or like me, like I never want to get rid of this house because it means so much to me.
Yeah, but you want a cloakroom. You need
I do want a cloakroom, which I cannot have in my little townhouse, but Yes,
Yeah.
but also, I don't ever want to get rid of it. So it's,
And
you've got to
spent a
really sort of
godforsaken
part
amount
ways with
on
that.
curtains. And there's other considerations which, chat to your financial planner and accountant. We'll say this a lot in this conversation because there's a lot of tax stuff that surrounds this conversation. So we can talk to what the lenders will do and assess, and it closely mirrors what is possible tax-wise. But quite often a lender will go, no, I won't do that. And the accountant will go, but I can do that. So that it is a different conversation.
Yeah.
When you chat to your accountant and financial advisor, look at these things, it's like, well, you've lived in that house at CGT free. You're not paying any capital gains on that. So why not leverage? Like there's a lot of considerations, and that's not to say sell and buy, do that. That's to say there's so much more than you're considering.
Yeah, just let it be an option for someone to talk you through. Yeah.
I think the other thing that's probably important to kind of probably look just after the CGT thing is that kind of equity piece as well. Once you do sell, buy, there's just really an opportunity to have a pretty clean debt structure from there in terms of loans, accessing equity. And it is an opportunity quite often to just clean things up a little bit. And so if you've gone, say you are in the position where you've invested in properties, you've taken equity out, you've gone that, you're looking to sell your home and finally upgrade and not get rid of the other properties, this whole process is a really, really important juncture to actually just go, can we just review this whole thing? And so the scenario that I said around getting everything right, clean, neat with the clients who had 4 or 5 days bridging, we redid the whole structure. And it is more, because of equity, we could actually get all the loans like individual per the property, which is cool. But he literally has said to me, he's like, this was the easiest structure we've ever had our investments in. And so I think it's just also going into this conversation with a holistic perspective to go, how can this be neater for me to manage better in the future?
Yeah, because depending on what you've done in the past, you may have had a split loan and you only have to have a couple of those for a few different properties, and you honestly don't know what's doing what. So tidy it up at the same time.
So look, I think just to tidy it all away and kind of like we've got that neatness perspective of, hey, you have an option to really get those solutions together. Like you can really bring that in, make it very simple. It's 6 things. What is possible within that? And then if none of them are, which is rare, there's rarely not an option, what is the easiest thing to boost it up? And so is it, hey, a second income? If you have only one income as a family, what do all these things look like to make this happen? And these things quite often is a month or 2 away from acting. So if we can take that opportunity, go through those 6 options, see what lands and what is possible, we then can actually plot a path to get you into your next home. Still not sacrifice the future with building a property portfolio and investing into property, whilst at the same time making sure kids, schools and everything's paid for. You're not feeling stretched. You're not maxed out. Whatever you want to accept as your risk appetite, it's all on the table. And so I think these things are really, really neat to be able to just actually take away and go into the next kind of phase of whatever you and your family need to do. It's not a big conversation. It's a bit of information, a bit of decision making. But realistically, we've got 6 options we want to run through. We'll triage through, see what you want to do, what one speaks to you as a couple. And then from there, let's just start moving. The momentum started. Let's keep it going. So, but yeah, I think as we close, I think what we want to do next is get a financial advisor to actually go through these figures.
I was going to say, if only we had a financial planner that we could talk to.
We've got a fair few that we know. But no, look, we are going to get Riley in to have a chat. I've got 2 clients. The one I've just mentioned actually is one of his clients. So we are going to go through and just discuss what he is recommending to his clients. We've got another client of his at the moment that we're actually mine first now with him. And we are just going to discuss what it looks like to, time it properly. and get it all moving forward, and what he as a financial advisor looks for to make these decisions within the tax implications that he can actually talk to.
Yeah.
So, guys, this is our second podcast. We hope that you've liked it, really enjoyed it. We're sorry we didn't give you the intro that we thought we were.
Yeah.
It was a great intro. We talked about socks, jocks, before we got into finance and accessing equity. Great topics. But the next one, we're going to go have a chat to Riley. And yeah, until then, I hope you like this video. Please subscribe. There's going to be way more coming down from here. And welcome to Finance But Neat.